All right, the financial sector has descended on the World Economic Forum here in Davos, Switzerland. Let's get to talk to one of the longtime CEOs in the banking sector. That is Stifel CEO Ron Kruszewski. Ron, good to see you as always. Second Davos for you, right?
It is my second Davos. It's been great.
Yeah, it's how is it different versus last year for you?
Well, you know, I've been saying, and I don't want to take any sides of any political issue, but last year almost every conversation was climate and was DEI, and now every conversation is tariff and deregulation. So it's got a different skip in the step, if you will.
A lot of different stuff coming at you, for sure. So as we're taping this, we're awaiting a speech here from President Trump to the global business community. What could the president say or do that would make you more optimistic as a bank CEO?
Look, I'm pretty optimistic right now, and I think that his message should be positive. He should encourage the world economies, that he's got an agenda. He's an American first agenda, yet we all recognize that we have to work globally, and I'm hoping he has a positive, inclusive message for the world. I think he will. Certainly excited with what he's announced so far. But people are nervous, especially where tariff gets people nervous.
Is it making clients nervous?
Not at this point. I think that if anything is making clients nervous, and what'll be the canary in the coal mine, if there is such a thing as this, it'll be the 10-year. So watch what the bond market does as these things roll out. No one knows what's going to happen here, and anyone who says they do doesn't realize there's a lot of things coming together here. But the 10-year will tell you whether or not they think some of these things are inflationary.
You have a history of making very good predictions on markets, on stocks. Like if we go, I've mentioned this before. Where do you think the 10-year is going?
I think that right now, I think it's going to be trading between 4.25 and 4.75. I don't think it's going to get out of hand either way. I think short-term rates are going to settle here, maybe a little bit lower, but it's a good environment, especially for the banks.
So I've heard some folks talk here about a 6% 10-year. Why wouldn't that happen?
Well, that would be an inflationary alarm that would be reacting to the tariffs would be very inflationary. The government spending is out of control. You do a lot of things would do that, but I guess I do try to make predictions. I'm not going to predict a 6% 10-year.
Well, can you?
Okay.
Well, then the market's going down.
Well, eventually.
I mean, the market's going to correct. You get a 6% 10-year. I mean, the stocks are down 20%.
Well, you know what, Brian? That's an interesting thing, and I think your viewers understand this. My simple way of saying whether the market's valued or how it's valued is I take the earnings yield, which is about 4.5%, and I compare it to the 10-year, which is about 4.5%, and that risk premium is very narrow. So that tells you that stocks are kind of priced for perfection. But if you get a 10-year go to 6%, that pretty much means equities are going down.
Yeah, price for perfection. What does this market need to see to keep stocks going, or looked at another ways, justify that perfection?
Well, I think that the market is already discounting that some of these things are going to be done. We're going to have a sensible border policy. We're going to get the tax the cuts extended, and there might be even some stimulus in tax. There's energy policy that makes a lot of sense, and there's a deregulatory bent, which is going to be very positive for business. So as those things come together, markets can do okay.
I've talked to a lot of global bank CEOs, but I think of Stifel, I mean, it is really dominant in a lot of areas in the United States. Does a fraying of tensions with China and Europe, does that impact your business?
Of course it does. I mean, anything that impacts global flows impact U.S. flows, and we're, as a financial institution, we're at the fulcrum between savers and people who need capital. So we don't want to see that. Those tensions, I'm hopeful. In fact, I would say as a risk, geopolitical is a risk that we can't lose sight of.
Are you a big deficit worrier?
Less than a lot of the deficit hawks. I mean, we are the reserve currency of the world. That has a huge advantage. However, we should never take that for granted. And so that's the other warning you got to be careful, is that we don't just believe we can print money forever.
I had one interview. It was with, I have a whole list here. I mean, the list of people who have come here at Yahoo Finance is wacko. Ray Dalio, he suggested if we get a rate hike, I mean, that could spell real doom for the debt markets and stock markets, even because it would feed, I guess, the deficit. I mean, do you subscribe to that?
Well, I mean, look, when interest takes as much up of the deficit it does as it does today, of course you can paint that scenario. But you know what this is about? This is about unleashing the economic activity, primarily in the United States, and growth always trumps these concerns, all right? Let's just get the economy going, and that will deal with all of the naysayers who say that we can't finance things. So we just need to get business growth going.
I've been trying to get a real pulse on the outlook for M&A this year. NASDAQ CEO Dina Friedman told me second half things will unlock. Morgan Stanley CEO Ted Pick told me second half will unlock, and there may be some big deals to be had. Is that big deal out there this year?
I think it is. I said last year, I think when we talked last year, I said 24 would be a transition year for 25, and I believe that that is true, but now it's got the added benefit of some tailwinds because of the new administration and the policies that are being put forth. And the biggest area is going to be in bank M&A, and when you think about the sector, the banks have just come off 2 years of an inverted yield curve, declining earnings for 2 years.
So bank consolidation.
Well, but the economic environment, let's start with that, with banks, is getting much better. Earnings are going to be actually going up. We may be revising estimates up in the banking sector. We haven't seen that in a couple of years. You put all that together, and then you put the fact that 8 new regulatory heads are going to be appointed from the SEC to the FDIC, all that are going to have more of a positive view towards bank M&A, and the fact that banks probably do need to combine for scale and innovation. Pretty good environment.
You have made a series of deals over the years.
Yeah.
Are you in the market for another financial services company?
Yeah, well, we always are, and we just did a small advisory deal in Europe, so a little bit of my belief that Europe might also
now I know
be
why you're here.
revived. Well, you know,
you used to never come, but now I guess I know why.
No, I'm here because look at this. I mean, how beautiful this is, and you know what? This is a great conference. It is.
Lastly, lots of talk about succession at one of your competitors. I mean, do you spend a lot of time? You're the longest serving bank CEO, and I've asked you this question like different ways, and you never answer it. But
you always get your foot in my back. You're trying to get me to retire.
But do you spend time on that?
Of course I do. Okay, look, we have a deep bench at Stifel. I tend to be the, sort of the voice of Stifel when I come on shows like this, so people associate the company with me more than they should.
You are the voice and face of Stifel.
I am, but that masks the fact that I've got tremendous talent, and if I decided not to come back for Davos for whatever reason, the company is in good hands with some very talented people. That said, of course, we have succession
I'm not
plans.
trying to push you out the door.
You are.
No, I'm not. All right, well, last one. But
right.
Do you see yourself, there's been this push, and it's not just in the banking sector, to have pass the baton, you stay on as executive chair. Do things like that interest you? And what's the benefit of having a transition like that?
Well, the benefit is that that we need room always for the next generation, and I recognize that. That said, I'm not going anywhere. Okay, so I'm sort of on the Jamie Dimon plan.
Okay, all right, good.
Within 5 years, I'll come on this show and I'll tell you that it's 5 years.
Well, I've asked you enough. Actually, lastly, there was a quick fun stat. I forgot what banking executive said this on the earnings call. They said you can now write 95% of prospectus using AI. So what does that mean? We're not going to have to work 100 hours anymore on Wall Street? I mean,
well, you know what? People will always work hard because it's a competitive business, and I say that we'll do 80 hours of work in 40 hours. So that might mean we'll do 160 hours of work in 80 hours. Look, people are very entrepreneurial, and they do this. However, let me leave you with this thought. The biggest takeaway that I have from Davos, besides all the political things that are going on, is the impact of AI, and specifically agent AI that works with humans. That is going to have, this year, big productivity increases, not just in financial services, but in healthcare and in every industry. You need to fasten your seatbelt. And I tell all of my partners, I say, look, you won't lose your job to AI, but you'll lose your job to someone who knows how to use AI. And so that's what I'm taking away from this. There's a lot of innovation coming.
And the key takeaway for our millions of viewers, Ron Khrushchevsky is not going anywhere. As Stifel CEO, he's not going anywhere. I'm also not trying to kick him out the door. Ron, always nice to see you.
Always good to see you.
Enjoy your second Davos.
Thanks.
We'll see you soon.